Okay. So I hope your day is doing well this far. I hope you've had a productive day. The name is Wilson Derito, a relationship manager at Ndovu Wealth. Had a stint of 18 years on financial services, and I'm passionate to be able to share my journey and help you through navigating the financial world, even as you get started. So allow me to then deep dive in. Right. So, okay. So again, our topic today is how to make money work for you. So let's again just begin with a simple but what I would call powerful question. What is investing? There we go. So investing means different to various people, but in essence, investing is just putting away your money into what I would wish to call assets. This could be stocks, bonds, real estate, or even a business, with the very expectation that it will grow over time and definitely generate returns. So in essence, it's basically allowing your money to work for you, as opposed to perhaps having it sitting idle in a bank and or saving under your mattress and wallet. So I always love looking at it as thinking of money like a seed, whereby if you plant it in the right environment, water it, give it time, predominantly it is bound to grow. And in simplistic term, that is what investing it is all about. So you should be able to ask yourself, why then should you invest? For various reasons. It could be beating inflation, and we'll get a chance of looking at what inflation is, which is basically, again, just erosion of your purchasing power over time. It could be you would also want to grow your wealth. It could also be an opportunity for you to achieve your life goals. Is it buying a home, educating your kids, planning for your retirement? It could be either of those examples. So the thing here is that the end game often than not is that financial independence is what we all look forward to attaining, because we want our hard-earned money to help us again cover costs and expenses again later on in life. So let's have a real conversation. Many of us feel the sense and security to put again money in the banks. I have no qualms about the banks. But let me ask you again just a simple question. Is that money really growing? And I want to bring the avenue of inflation that we have just spoken a few minutes ago. So, in essence, I always say inflation, as earlier indicated, is a gradual increase of the cost of goods and services over time. So, while it might sound harmless, inflation erodes your purchasing power in a very simplistic and small way. Let me cite an example that I love to use. Last year, I bought with 1,000 Kenya shillings, I was able to buy 20 bananas. This year, the same 1,000 is only according me 10 bananas. What does that mean? 50% of my purchasing power has been eroded. And that exactly is inflation. Eats away your money without you noticing. Now, I would wish now just to bring in the avenue of the bank trap. On average in Kenya, the inflation works at about 7%. And that said, bank savings on average, even with fixed deposit, work at about 3%. So what you're looking at is a loss of value of about 4% every year. Now, as an advisor, I feel that is an opportunity cost that you can be able to hedge. Hence the reason I will just briefly make an introduction of something that is called a money market fund, MMF, which is a smarter, low risk way. The reason why I'm bringing the MMF is because I would wish then to bring the introduction of something called power of compounding, which is in the next slide. Right. Beautiful. So you may be asking yourself, so what is compounding? So compounding loosely can be translated as when your money earns returns and then those returns earn more returns. Look at it like snowballing, whereby as it goes down the hill, it gets momentum and builds to be something very powerful. So let's break it down. Looking at the example that has been cited. we're looking at an opportunity whereby if you invest 5,000 every month in a money market fund, which is currently offering 13.06%, you're bound to earn growth of your value at 1.25. Quite impressive. Now let's look at comparatives, if you may. All right. Allow me to, again, make citing of examples. The first part, let's call him Brian. The second part, let's call him Joel. So let's use citation of examples. So both Brian and Joel are both disciplined, as you can be able to see on your screen. Both of them have committed 100,000 every month for the next 5 years. However, the only difference is, again, their strategy. So Brian at the top level has decided to put his money in a money market fund, in this case, giving him an average return of 15%. Yet Joel, on the other hand, has decided, let's use our regular bank at 3% annual interest rate. Now, after 5 years, it is evident Brian's investment has grown to shy of 9.06 million. On the other hand, Joel's savings, steady as it may be, has only gone to 6.5. So what's the difference? Literally, 2.48 million is left on the table by Joel. Let's take a minute and think about it. What can't we all do? What are the possibilities of what 2.5 million can do for us? You could buy that desired car, pay that land deposit, fund your education. So basically, this just goes to show the big difference about the magic of compounding. So hold that thought. So let's now deep dive into avenues of investments and what Ndovu looks forward to, in essence, in terms of offerings of investment opportunities. All right. So let's explore the key types of investment available in view of you putting and building a well-rounded portfolio. There we go. We have something called an exchange-traded fund. As indicated, these are a basket of listed stocks, bonds, and also commodities put together, invested in a stock market, and you're able to gain returns from the same. Now, some takeaways from this is the very fact that because these investments are now curated sector by sector, meaning it, by making an investment in, say, one ETF, exchange traded fund, it gives you an opportunity now to have an opportunity to invest in, say, various sectors, say, oh, that's interesting. All right. Let's just, okay, the techie. I was looking for that name. So within the technology, basically it gives you an opportunity to invest in Nvidia, Microsoft, Apple, meaning with one ETF, you're actually getting an exposure of multiple assets, which in essence gives you a much better opportunity for two things. One, to diversify your risk, and also spreading risk within various sectors. I hope you're good at that. All right. Let's look at the second one, stocks. Now, sorry, before we move to stocks, I wish to just mention that the minimum entry level for ETFs within Novu is 5,000 Kenya shillings. All right. Fractional stocks. So now, stocks lets you, as an investor, have an opportunity to buy into expensive global stocks like the cases of Amazon and Tesla, even despite the very fact that you might have limited capital at the point in time that you want to commence your investment journey. Why do I say this? Within the stocks, with as little as 1,000 Kenya shillings, you can be able to jump and buy into popular stocks like Amazon and Tesla, like I just mentioned a minute ago, and have an opportunity to gain into global markets and build your portfolio gradually. All right. Bonds. All right. So in essence, bonds are of two types, whereby you could be, which in essence, where a bond is a loan to either a government and or a corporate institution. Within Ndovu, we offer bonds that are offered by the government. Now, this we are able to do during the primary market when the government of Kenya is seeking leverage from members of the public. We're able to give you an opportunity alongside other members of the public to be able to buy that very bond. Certainly. Even as the bond closes and you're able to get your allocation, the good thing is that now on the secondary market, you can still be able to get a bond through transfer from one bondholder to the other. And an interesting manner is the very fact that at no cost. Materially, if you were to buy directly from the government, our value proposition is the very fact that if you bought from the government, it would mean you would have to discount it through the Nairobi Securities Exchange. And in essence, you would be able to be discounting it perhaps at about 13 to 14%. So there's loss of your principal value. Within Novu, you get pound for your bond bought. Our minimum bond acquisition is 50,000 Kenya shilling. Right. Beautiful. All right. Earlier on, I remember I'd mentioned about money market funds. So basically, these are short-term, low-risk debt instruments that are safe, offer aggressive, beautiful returns, look at capital preservation, and are good for building your emergency, short-term investment savings, and are starting out as your principal investment opportunity. Now, lastly, we have something called commodities, which is basically raw materials or primary goods traded within the markets. There are two, again, distinct segments, hard commodities being gold, oil, silver, natural gas, very nice for hedging inflation, and soft commodities like coffee, sugar, wheat. Again, both also helps you to diversify your portfolio as well as hedge inflation. So what's my final thought on all this? Each of the options that we've discussed in the two slides gives you an opportunity to, one, plan your investment, look at your goals, appreciate your risk tolerance, and be able to form what we call a portfolio. Now, with that understanding, let's now move to the next segment. Let's look at risk. All right. Now, what is risk? So in simple terms, risk is the possibility that your investment might lose value. Again, this could be caused by market ups, downs, economic shifts, and or even global events. However, there's a twist to it. Risk isn't always a bad thing. Why, you may ask? Because the higher the risk, often does it come with potential of higher returns. So it's all about understanding and managing your risk wisely. So that said, let's look at the different types of risks that, again, within the market we have for our own appreciation. Very good. So, market risk. Now, so this is a type of risk whereby investments are bound to lose value due to fluctuations in the financial markets. Now, what would cause this? Ranging from economic slowdowns, political instability, again, also sudden drastic shifts in investment confidence. Now, for us at Novu, we always look forward to an opportunity to manage any perceived risks. So for purposes of managing and hedging your market risk, we always advocate for long-term investing. How do you do that? Stay invested for a significant period of time to ride out what I wish to call short-term market dips. Remember, as always, as much as markets go down, they always go up. So always remember, markets always recover. Second bit, diversification. So diversification is basically spreading out your investments across various asset classes. This could be stocks, bonds, and commodities, as well as MMFs that we've discussed in the types of investments in 2 slides earlier. So in doing this, you're able to cushion the impact of anything happening in either of the various asset counters. All right. Thirdly, dollar cost averaging. This simply means investing in a stipulated fixed amount regularly, whether the markets are going up or down, and this is able to average out your costs, significantly hedging your market risks. Let's then move to the next, inflation risk. Now, we had a chance to discuss this earlier, but let's look at it in depth. So basically, an inflation risk is a risk that your money's buying power decreases over time on account of price rises. So again, let's look at the early example. Let's say you earn 4% on your earnings, but inflation is at 7%. Your real return is actually negative because it's wiped away by the gains of, the loss of your purchasing power. So how then do you manage inflation risk? One, and as earlier mentioned, investing in commodities. Now, commodities, again, we had talked about assets in gold, oil, agriculture, which tend to perform when inflation is high. Secondly, also investing in stocks, companies that can adjust prices, push up growing their profits over the long term. The good thing about stocks, predominantly over time, they are able to outpace inflation. Now let's look at another risk, liquidity risk. Now, as the name suggests, this is the risk of not being able to quickly access your funds or sell your investments without losing value. All right, we can be looking at it in terms of that parcel of land, Doroti, Maguta, which you cannot be able to sell overnight in times of an emergency. So how then do you manage your liquidity risks? By perhaps setting up an emergency fund, as well as putting up your funds in a money market fund. Why? It is low risk, it earns interest, and you can access quickly as and when needed. All right. So, as you can see displayed on the screen, diversification is very key. Why? It's the best defense against the risks that we've discussed. And how do you do that? By putting your investment across different asset classes. So what happens? If one area underperforms, the others are able to balance it out. So it's always good to hold a portfolio in various stocks, bonds, ETFs, money market fund, so that to keep your overall performance more stable. All right. So let's look at steps to take before making your first investment. Put out your goals clearly, both short-term, mid-term, and long-term. What are your objectives? What do you intend to achieve? Is it that parcel of land? Is it that house? Is it that retirement? Let your goals be set very clear. Secondly, understand your risk tolerance. How much are you able to take up? So risks vary from conservative, middle term, and aggressive. So understand yourself, and within the Ndovu team, you're ready and willing again to give you personalized engagements whereby you can be able to help profile your risk appetite. Thirdly, always build an emergency fund. It's always good to have 3 to 6 months of your expenses covered as you commence your investment journey. We're always happy for you to commence small as you continue to build your investments. Case in point, we're always keen to recommend to investors commence with gold and or silver and build your portfolio moving forward. All right. So you may be asking yourself, why Novu? Okay. Now, within Novu, we give you an opportunity to be able to put away pen and paper, going to your chief to have him to assent for you to make an investment or to ascertain your eligibility. Within Novu, we've given a flat out mobile application that you can be able to access it on the web and from the comfort of your phone, ease of navigation. Secondly, we pride ourselves in the very fact that we offer very competitive expense ratios for the various asset classes that we've discussed. Thirdly, within Novu, we give you an opportunity to, again, access international global markets from the comfort of your phone. You can be able to buy ETFs, invest in fractional stocks, as well as commodities. Fourthly, we wish to put away too much jargon, jawbreakers, offer clear explanation, very transparent, real-time tracking, and no hidden charges. All right. Beautiful. So, what is our value proposition? Within Novu, we're giving you a wide range of investment channels. We've discussed them, let me undertake them. Money market fund, government bonds and bills, global exchanges that have ETFs and fractional stocks, as well as commodities. Secondly, we operate within the confines of a controlled environment. We are licensed by Capital Markets Authority locally, as well as SEC, Securities Exchange Commissions, as well as FINRA. So we abide to the rules of the game. Thirdly, we believe in taking through our potential and investors through a responsible investment path. You'll be able to see within our application, for every investment class, we've also given the risk that is, again, assigned to the various investment journey that you wish to take. Very transparent, we pride ourselves, ease of access, ready to give you a financial advisor. We'll be able to share a link whereby you can be able, through the Calendly, book an opportunity to be taken through in an individual manner. Because again, we believe investment is about, again, a personal journey, data of noise, and again, based on your respective goal. We pride ourselves to have a one-shop stop for the investments that we've discussed today. So, what's our vision? We look forward to driving economic empowerment through, again, digital savings and investments in Africa, targeting 965 million Africans, and what do you know, perhaps even through to the world, East Europe, the Americans, and what have you. So, what's my call to action today? Please, I call you up to join the 150,000 plus investors who have continued to trust Ndovu to build and protect their wealth. Whether you're just getting started or looking to grow your portfolio, Ndovu is here to grow with you every step of the way. Like I mentioned, easy to use mobile platform, easy to access the various stock investments. Sign up today. Enjoy a limited one free advisory section from investment experts tailored to your financial goals. All right. Happy to receive any questions that you may have. All right, and download the Ndovu app today. Thank you. So, Timothy, do we have any questions within the chat?
Good day, Wilson. The comments are being answered.
Okay. All right.
I can shoot you one. Person is asking about the standard plan that you are offering, and just a brief example, just a brief explanation of what the standard plan is.
Put the question again.
A brief explanation of the standard plan that we offer.
All right, let me just go back to the presentation. All right, standard plan in terms of our expense ratio, correct?
Yes.
All right, that's fine. All right, let me take it up. So Like I mentioned, we have various expense ratios. Now, our standard plan is part of what we call our subscription towards our expense ratio. So our entry level is a basic, then we have the standard, then we have the premium. Now, based on, again, your investment values, the multiplicity of the times that you get to invest, so shall you then be able to, again, subscribe to the various expense ratios. Now, what I need to mention is the very fact that we have also segmented our expense ratios based on now, is it the local investment opportunities and or the ETFs. So allow me to start with the ETFs. Now, within the ETFs, like I mentioned, investment avenues is at 5,000 Kenya shillings being the minimum entry level. So you have three opportunities for the costing. Our entry level expense ratio is at 4.5%. Are we together? Of the principal value. We have also another bundle whereby upon paying 3,000 Kenya shillings, 30,000, sorry, Kenya shillings, you'll be charged 4%. Now, the upper echelon, upon paying 30,000 Kenya shillings annually, then you'll be charged at 2%. Are we clear about that? All right. So that applies for both ETFs and stocks. Remember, ETF and stocks, ETF 5,000, stocks 1,000. Expense ratios both are the same. Now let me go to the third one, bonds. Now bonds, our expense ratio is based on the coupon. Remember, a bond, upon being floated, you're bound to receive a coupon, which is basically interest that you receive every 6 months. So as you get your coupon every 6 months, Ndovu charges 0.75% annualized, meaning there are two coupons. So divided by two becomes 0.0375% of the coupon. Now this is only charged for the 2 years, meaning the four coupons. You have a coupon every year, so 0.0 to the rest, and maturity of the bond predominantly remains to the investor. Lastly, money market fund. Now, within the app, what you've seen as indicated as the returns, 13.06, is already net of our expense ratio being 2%. So everything else, apart from now with the withholding tax, everything else is distributable to the investor. Now, the thing about the commodity also is similar to the ETFs, entry level 5,000, and the treatment is similar, 4%, 4.5%, 4%, and 2%, the various classes. Money market fund, entry level, 50,000 Kenya shillings. I hope that answers the question. Any other question that there may be? Let me also just jump into the chat. So do you charge for the ETF on every transaction? That has been my encounter. All right. Thanks a lot, Kevin Mwangi. Yes, Kevin. Now, what has basically happened, Kevin, is the very fact that now these counters are often very prone for a projected growth. So we've always assumed the very fact that, again, upon netting off the expense ratio one off, there will be no other additional expense during the life tenure of that investment. Meaning at the point in time you have marginal growths, you can be able to see on our various counters, on average within Novu has an about 18% in terms of returns on the ETFs. So you can imagine out of the 4.5, there will be no other additional expense, even at the point in time of disinvesting and exiting. All right, let me also look at another one. So if we invest in ETFs without opting for a plan, are we able to not blow our accounts as if similar to Forex? Walter Otieno. Not really. Okay, perhaps I might not understand how you will blow accounts, but basically what happens, Walter, is a very fact that the under your avatar, you can be able to look at our plans. Now, based on account of now how you've commenced your investment and how you're growing your investment, then shall you be able to make an informed decision whether you want to move from one plan to the other. All right, let me continue to pick a few more. All right. All right. Thank you so much, Sharon. You've been answered about availability of the bond, subject to availability. So Sharon is also asking, could we have the option to hide balance, like what uh, is happening with on M-Pesa app? All right, Sharon, thanks for again your valid opinion. It's something perhaps we can also look internally in view of also incorporating that in our app. So we have correct Joey Come. If you pull out part of my investments, how long does it take to sell in assets, settling and getting my cash via M-Pesa and bank account? All right. Thanks a lot, Joey. So on average, what basically happens is that you've put your investment through, you're enjoying your investment journey. We live in a day and age whereby we believe we have fast maturing obligations, fender bender, opportunity upon which that you need to again encash and have acquisition of your funds. So what basically happens is that you go to the application, you choose a portfolio that you'd wish to disinvest part of or a portion of for that matter. Upon doing so, now that becomes an indication on our part that now we have to notify again through the system to the fund manager to again exit your position. So when that happens, the same is made available to your pocket. So on average, the turnaround period for the same is about 2 to 3 working days, again, depending on again the timing in which that you're able to put it through. Correct. All right, let me just try to look at any other questions that could be there. Do you have an investment lock-in period for any of your products? Brilliant. Now, Kawira, thank you so much for that. Now, you're in for luck. About a week ago, Ndovu was fortunate enough to get consent from Capital Markets Authority. So very soon we'll be offering something that we call a special fund. Now, within that special fund, again, the particulars to follow, what will basically happen is that you can be able to put in your funds, have what you're calling a targeted period, a lock-in period, say for, say, 6 months and or to a year, and then Novu takes an active role in investing on your behalf. So that is definitely in the pipeline, but as it is, we do not have a lock-in period for all the other products. You are free to, again, invest today and exit your position as and when you feel you've either attained your investment objective and or you have need to cash out your investment. Hope that answers you, Kawira. So, Joey, could you break down all potential fees, management, trading, currency, conversions, withdrawal? Thank you so much, Joey. So, Joey, there is only one expense ratio, the ones that I spoke about. There is none other. There is no other hidden costs, save for the respective, again, based on, again, the subscription that you took, 4.5, 4, and 2% for ETFs. There is no other fee after that. Any other fee perhaps may be charged is maybe transactional fees that are charged by a commercial bank. We do not have an exit fee. We do not have any other additional fee as we continue to transact and invest within Ndovu. All right. I'm just trying to pick a few more questions. All right. Hannah Achari, how do you withdraw your funds from the Ndovu app? Thank you so much, Anna. So basically, what you do, Anna, you go to your Ndovu app. Upon logging in, go to your portfolio. Once you get to your portfolio, you'll be able to see, again, the listing of what you've invested in. Perhaps you have your MMF, you have your gold, you have your various shares that you have. So once you get to it, you choose one. Once you choose it, you click into it. It gives you an option of disinvest. So upon clicking it, you can be able now to say, progress it. Am I disinvesting it in full or a portion of it? Then once that happens, back end, Ndovu is able to exit your position and it makes the funds available to your pocket. Now, meaning disinvesting is a two-step position. You first make the disinvesting, exiting your position. The funds are made available to your pocket. Then once they are in your pocket, you have now three options. You can convert them, perhaps if the USD to KES. You can top up through your pocket. You can even invest. Perhaps you want to exit from one counter to another. Is that okay? You're in gold, you wish to move to money market. Through the pocket, you can be able to do that. And finally, you can also be able to exit completely, whereby be it that you want to choose to pay through the bank and or mobile money wallet, which is M-Pesa, then at that point in time, you can choose to withdraw completely. Hope that answers Anna Achari. Okay. So just trying to look. All right. Thank you again, Paul Miner from Limuru, ready to invest. Please join the herd. Hello. Okay. Also, just want to see. Mr. Peter, is there a way you guys can increase the deposit withdrawal approvals, an option to withdraw to bank or mobile without going through the pocket? All right. Again, thank you so much, Peter. We always purpose to do this, again, just for purposes of securing your portfolio. So that if again your falls in the hands of wrong people, then there's a staged approach. Again, however, if there's a way perhaps we can be able to shorten the withdrawal process, I would almost imagine then that would almost remedy again what Peter Muhoho is looking at. All right. So Mital Shah, will we be able to get these notes for reference? Certainly. We'll be able to share the same. All right, as well as the recording. Let me just go to the very end. See, does Joey Koome, does Ndovu automatically reinvest dividends for ETFs and stocks, or do I need to manually reinvest them? Are there fees for invested amounts? Thank you so much, Joey. All right, now let me start with ETFs. So within the ETFs that, again, Ndovu has carefully curated, what basically happens is that on specified different time intervals, the companies upon which that form your individual stock, they usually pay dividends. Now, dividends, as we all agreeable, this is surpluses that the various companies has agreed to distribute. So if the company agrees to distribute, now what we found suitable at the point in time that we are rolling out the ETFs is that we usually make it available to you, but rolled back to your principal. Now that process is automated, and basically no costs are incurred to it, and you can be able to get and secure your statement to be able to see, now these were the dividends that I was able to receive within the specific period, meaning your principal is able to grow. Now, let me shift to stocks. Now, within stocks, what basically has happened is that because these are individual stocks, as and when the dividends are made available, the same is made available to your pocket. So once it gets to your pocket, we give you an opportunity to make an informed decision. You can either disinvest completely, you can either invest in another stock, and or also invest in the same portfolio that paid the dividends for you to be able to get what we call the power of compounding. I hope that answers you, Joey Koome. Right. Stacy Otieno, do you send right, let me just go back to Stacy. Do you send monthly statements indicating listed stocks? Moving pretty fast. Okay. So, Stacy, within the platform, through your avatar, you can be able to just go to your statements and you can be able to generate. That again is not lost to the very fact that we as Ndovu improve again the detailing of information within again the statements, and or also make them available through email again to yourselves, again without again not necessarily again jamming your various email folders. All right, Charles Burungi. Do I pay the Ndovu one-off fee on the funds I've disinvested and kept them in the pocket? Charles, absolutely not. So the one-off fee is paid at the cycle of entry of investment. Thereafter, no other charges are levied to your investment portfolio. So there's no option to perhaps pay it at the point in time that you're exiting, and or have it again netted off from your pocket. Is that okay, Charles? All right. Pendo Carissa. Can you have a one-off fee on investing? Probably one-off fee annually. All right. So, Pendo, we always purpose to revise our one-off fees, and we're always sensitive again to be responsive to our investors' queries. I can tell you for a fact, not so long ago, we were able to revise these charges. We had the upper limit used to be about 3, we actually used to be at 3.5. We brought it down to 2%. So nothing, all this is not cast on stone. Again, internally, once we see that it's something that we can be able to take up, it's a discussion that will be ready and willing again to pick and progress in view of also adjusting. All right. Okay. Beautiful. Very interactive. So any last minute takers in terms of questions before then we can be able, good, can see a new message. All right. So Anthony Masika, how can I know how much shares is 5,000 if I want to invest in ETFs? All right. So Anthony, so basically what happens is, like I mentioned in terms of the minimum thresholds for investment, within the ETFs, it's 5,000. So basically what happens is when you invest, the investment journey is pretty simple. You choose, again, through our financial advisors, we take you through the various investment portfolios that you have that you can actually create. So say you choose gold. Now, if you choose gold, minimum is 5,000. So basically what happens is you'll go to the gold, click the invest now button. It gives you an opportunity to either choose you want to pay via M-Pesa and or you also want to pay via the bank. If you choose to pay via M-Pesa, an STK notification is sent to your registered phone and you're able to make that payment. So you'll be able to invest in 5,000. So again, if you chose to invest via the bank, the bank particulars are given, you're able to populate the same in your respective banking payment platform, and payment is done. Now, once the 5,000 is recovered, at that point in time, we net off the management fee and everything else is invested to the platform and you're able to commence your investment journey at that point in time. All right. All right, Pendo Carissa, please do so every time I top up, I get charged the fee, yet it's the same product. Yes. Now, Pendo, now what basically happens is the thing about, now this only perhaps happens on ETFs because ETFs has a timing concept, it's a time value of money. Basically because every investment becomes an respective different investment journey. I know, Joey, that doesn't happen wherever you're doing the same with an MMF because basically it's capital preservation and you're able to build the portfolio as you go along. So at this point in time, we currently treat as every investment journey as a different investment path. Hence the reason why you're able just to progress as you invest, you're charged. However, again, that's again a conversation we should be able to pick up and see what it is that we can better improve moving forward. All right. Mital Shah, sorry, I may be missing to see, but how do I deposit money into my Ndovu pocket? Now, thank you so much, Mital Shah. Now, we've put a very interesting concept, because basically what happens is, as stipulated by CMA, we should not be able to mop up funds and keep before investing. So the pocket only comes alive upon you having invested through again, the opportunity that I just shared a minute ago. You choose the investment that you want to invest. Again, in this case, gold, you invest, and you've commenced your investment journey. Once you disinvest, even partially, only then does it activate your pocket. Now, once it is in the pocket, look at the pocket as a staging area. You can be able to top up, but it should not be a place where you park the funds. Because remember, at the pocket, you're not earning any gains from it. So hence the reason why we've structured ourselves in such a manner that you do not invest, you do not put the funds with us first as you choose your investment portfolio. Would love to have the conversation whereby you're able to choose what will work with you, then you invest, then at the point in time you wish to disinvest briefly, then you can be able to activate your pocket. Only then can you be able to put funds into your pocket. I hope that answers you, Mital Shah. Beautiful. All right. Yes, Mital Shah. You can just directly invest into a particular portfolio. That is correct. Okay. All right. Thank you so very much. It's been more than a pleasure having you on call. As always, let's continue to progress in this conversation. We'll have an opportunity to share what, again, we've discussed today. And let's continue to diligently invest. Let's look at how the power of compounding will work for our respective goals. Invest today. Wish you all the best in your investment journey, and looking forward to you meeting your respective investment objectives. Stay safe. Be blessed. Thank you so very much. Good night.